Yes, we have analyzed our information. Now it's time for us to record. Remember, we said we received, this is what we received. We received 120. We know that this must go to the account where we keep all the money received from our clients. And at the same time, we need to show that an account of Mr. Vesta is open because the money that we received, which is in the trust bank account, belongs to Mr. Vesta. So we need to go and record in the two accounts. Okay. So now I'm going to go down there, the trust cash book or the trust bank account, and I must also go to the trust, Mr. Vesta Trust. Okay, so it means we need to go and record Mr. Vesta. This amount of money into the bank. I hope it makes sense. So it means because we are receiving cash, we must come to the debit side of what? Of the bank, because obviously we are receiving money there. So we're gonna come here and put Mr. Vesta here. Can you see now? So this means that Mr. Vesta, this money belongs to Mr. Vesta. So we can even write here next to it and say Mr. Vesta Trust. Or can just write T. So I'm just writing this for the sake of understanding. Even if you write Mr. Vesta, it's okay. So this means that in the bank, we have increased. Can you see now? We have increased our bank here. We've increased our bank here by how much? 120. But at the same time, we know that this 120 belongs to Mr. Vesta. So Mr. Vesta is our trust creditor. It means we owe him. So it means we must go and increase our creditor, which is a liability. But the easiest way is that because we took it from the debit side here, we see it on the debit side here, we need to take it on the opposite side. Remember the double entry system in accounting. So I know that in Mr. Vesta's account, I must go and record 120 on the opposite side. So it means I'm going to go to the opposite side, but I must check where did we record this amount again. It comes from the trust cash book here. Can you see now? I'm going to write trust cash book or trust bank under Mr. Vesta. So I'm going to come here on the opposite side, and you can see I'm going to write trust bank, and that trust bank, can you see now? This is the amount that I have. Can you see now? So again, like we said before, the rules of accounting must be used. So here we have got increase. Remember, this is a liability. This is a liability. Okay. And this is an asset. Okay. So we need to understand this. The rules are very much important. So we've recorded what? The 120. Okay. And then remember, we took the 120 and we invested. So we need to go and invest that 120. By the way, if we invest that 120, it means we must take it out of what? Of the bank, because the money is standing in the bank. Okay, so we need to make sure that we invest that amount of money. So I'm gonna open the bank account. Obviously, I do have the bank account, so I'm gonna go and record to show that I'm investing. I'm gonna take the money out of the bank. So when I take money out of the bank, it means I must come to the bank account. Obviously, I must come to the opposite side. I must come here and say I have invested. Can you see now? So I have invested that money. Okay, so my system is a bit slow, but yeah, so let me just wait for the system to respond. So I've invested the money. So again here, I've invested. Can you see now? I invested in terms of section 86.3. So it means I took this money out. So that's why here you can see, because it's an asset, it is going what? It is going down. Okay, it's going down. So now, at the same time, I must go and record under trust investment on the opposite side. And again, it makes sense because trust investment, you can check on top there. What did you say? It's an asset. Assets increase on the debit side. So I'm the trust investment, but on the debit side. trust investment on the debit side. So I must look for that trust investment on the debit side, and I must come and record it here. Can you see now? It means I took that money from the trust investment. Can you see now? From the trust bank, and now I record on the debit side. I hope it makes sense. Remember, we don't have to affect Mr. Vesta as one tree because the money was just invested. So this money still belongs to Mr. Vesta, but we just decided to invest. So that interest belongs to Fidelity. But even if this money belongs to Mr. Vesta, we don't have to affect Mr. Vesta with the investment because investment does not have an effect on this. The fact is this money still belongs to Mr. Vesta. It's just the transactions took place between the trust bank where we put the money and the investment. I hope it makes sense. Now, what happened thereafter? Obviously, is for the benefit of what? Of the Fidelity. Okay, so now let's deal with the interest here. They say we managed to earn an interest of 10,000, and remember this interest is as per section 863. It means the whole amount of money will belong to what? To Fidelity Fund. So what do we need to do? We need to make sure that we go and record the whole amount under what? Under the interest. So under the interest, as you can see here, I'm going to go to the interest section. Is the interest. So that interest, so obviously, we receive that interest. I'm going to go and record the interest. Remember, the interest is an income. It will come to here because it must go to the trust bank account. I'm just going to say trust bank because the whole interest must go to the trust. The interest was how much? 10,000. Yes, it was 10,000. Can you see now? So it shows that the interest, remember, this is an income. Incomes increase on the debit side, on the credit side, sorry. Can you see now? So it means at the end of the day, this information is very much useful. But at the same time, before you forget, the whole amount belongs to what? To Sylvester. And to me, not to Sylvester, sorry, I'm very selfish. It belongs to the Fidelity. So I must take the whole amount, fund, which is how much? 10,000. So the whole amount belongs to Fidelity. Remember the previous exercise with the section 86.4, we had to take 5% to our client, the remaining 95% went to the client, and the 5% went to our Fidelity. But in this case, 100% will go to Fidelity. I hope it makes sense. Okay, 100% goes to Fidelity. So now I know that this will go to the Fidelity, and this whole amount obviously will go to the trust bank account because the investment has matured. It means in the trust bank account, we're going to receive both trust bank account, both trust investments together with the interest. So, but before I forget, let's take this to the Fidelity under which side? Remember here we took it from the debit, we take it to the credit to show that we owe them. So I'm going to go to Fidelity, and I'm just going to say section 86 interest. And then that, how much is it? It's the whole 10,000. 10,000. Okay. Whole 10,000. So I'm gonna go there on the opposite side. Remember, I must come here and say, can you see now? So it means if you can check there, from debit, it comes to the credit. This shows that I owe them. Can you see now? I owe them what? I owe the Fidelity how much? 10,000. Okay, you can see. So this amount, the whole amount belongs to Fidelity. But if it was section 86.4, only 5% of this amount was supposed to go to Fidelity, and the remainder to go to Mr. Vesta. I hope it makes sense. Now, before we forget, let's go back to the interest. Remember this, we said trust bank account. It means this must go back to the trust bank account because the investment has matured. So we got 10,000 back together with what? 120,000. So we got 120 plus 10,000. So it means we must go and receive this 120 back. Can you see now? So, but this came together with what? With the interest. So I don't think they will penalize you if you just say, I received 120 back and I also received interest back. But I can see in most books, they normally put the figures together. They normally say, okay, we received 120. We received 120 plus the interest together. So all in all is 120 plus what? 120 plus 10. So it's going to give us 130. Okay, so I think even if you can separate the interest, they won't penalize you because the fact is you understand how to put it. So what I'm going to do here, I'm just going to come here and put the amount here as how much? As 130. Can you see now? Or maybe you can say trust investment 120, section 86.3 interest 10,000. For me, I won't even penalize you for that. I don't think they will penalize you for that. I hope it makes sense. Now, what must we do thereafter? This, if the question says you need to pay the interest that you received to the beneficiary, you need to pay. But if they don't say you must not, they don't say anything about paying the interest, you just have to leave it like that, okay, and balance the account. But here, let's assume that they said you must pay the interest after maturity. So what I'm gonna come here and pay. Remember, when I pay, it means I must pay what I owe. At the moment, I owe Fidelity how much? 10,000. So for me to pay 10,000, I must come to the other side here. You see now? And I say what? I say trust bank or trust cash book because I need to pay. I'll take money from the trust cash book. Can you see now? This means this has been paid. But this money must be taken from the trust bank account. So I'm going to go to the debit side and take this money out. So I'm going to say Fidelity I'm going to say Fidelity side because I'm paying. Can you see now? I'm going to pay my Fidelity here and I'm going to pay them how much? 10,000. Can you see now? Very easy, just like that. So this is how you record. Okay. And thereafter, what you can do, you can just go and balance the account and check how much do you still have in your account. Okay, so you can, I think you still remember how to balance. So I don't think that I need to balance this at the moment. So I'm just going to leave it like this. Hopefully this makes sense. So if you want to know how to balance the account, just check the question that I had on section 86.4. I did balance the account there, but I think this is the enough information at the moment. Thank you very much, and then have a great one.